Good morning, everyone. Thank you for joining us for the second day of our Red Cloud Oktoberfest conference. We'd like to thank Cortland Credit for sponsoring this session. My name is Tim Lee, and I'm a mining analyst here at Red Cloud Securities. We welcome Tim Warman, CEO of Fiore Gold. He will speak to us about Fiore's Pan Gold Mine, as well as its other exploration and development projects in the Western US. Tim, you have 10 minutes, and then we'll have a 5-minute Q&A at the end of the session. Attendees, please feel free to ask questions using the Q&A link below. Take it away, Tim.
Thanks, Tim, and thanks everyone for taking the time to listen this morning. I'm Tim Warman, the CEO of Fiore Gold. And Fiore is a 100% US domestic gold producer, developer, and explorer, primarily focused in Nevada. We have 3 assets in Nevada, 2 of them, Pan and Gold Rock. We picked up in 2016 as part of a bankruptcy auction. Pan is a producing mine. Gold Rock is a permitted development project. And just recently, we've picked up a 3rd project called Illapa, which is a more early stage exploration project with a past producing mine on it. It's right next door to our other 2 properties, and really that makes Nevada the central focus of the company. We also have a 3rd project, though, in Washington State called Golden Eagle. It's a 2 million ounce deposit at an earlier stage. And I'll talk a little bit about that, but really the focus for today is going to be on Nevada. So our goal is really to create a multi-asset, 100% domestic US gold producer. We think that's a little interesting niche to be in because it would appeal to particularly US generalists and other generalist investors who want to get exposure to the gold space, but don't want the political risk profile that comes with working in places like Papua New Guinea or West Africa or Latin America and all these other spots. So how do we do that? Well, we've got the Pan mine right now producing. We're going to optimize that. Right now, it's producing around 45,000 ounces per year. We think that with some optimization efforts, we can get that up just north of 50,000 ounces. The major growth, though, is going to come from our Gold Rock project. Gold Rock is a permitted development project. It's only 8 miles away from Pan. We're currently working through a feasibility study on that will be out next year with the idea of getting that into production in 2024. That will more than double our gold production and get us up over 100,000 ounces a year. And then, of course, we've got a big land package in Nevada, 222 square kilometers, about 55,000 acres, one of the largest land packages in Nevada that isn't held by a major. So we're going to be spending a lot of time and a lot of effort exploring that land package this year. There's always the potential through M&A to add additional production. That's been a little more challenging than we had hoped, trying to find a good asset that actually makes money, as our Pan mine does, and so that we can grow the company and the production base responsibly. Our first asset, the Pan mine, is a pretty typical open pit heap leach operation. There's 2 pits, the north pit, the south pit. There's a leach pad in the center here, crushing circuit here, ADR plant. We produce gold, sell it to the refiners. It's a really simple operation. It's a compact operation. And one of the things we're very proud of, it's a very safe operation. And that overall operational excellence results in some pretty impressive performance. You can see here, gold ounces produced, 2019, 41,000. 2020, 46,000. And just recently, we announced our fiscal 21 gold production of 45,397 ounces, right in the middle of our guidance range. Our fiscal year ends at the end of September, so we're actually now into fiscal 22. You can see all-in sustaining costs holding relatively steady. And what really shows here well is in 2020, with higher gold prices and this strong production profile, Pan generated 24 million US in operating cash flow, 17 million in adjusted earnings. If you look at the cash flow per share metrics of about 24 cents US per share, or the earnings per share units of about 18 cents per share, we're currently trading at about 5 times earning and about 4 times cash flow. So we think it's an excellent entry point to the stock for investors. One of the reasons we think it is that cheap is because we're small, but we have some pretty good plans to grow the company. This is our guidance. Actually, this was our guidance for the year just past. So we hit right in the middle of our production range. Cash costs, all-in sustaining costs are in the 13 to 1350 level at a corporate level. One of the key things, though, is that not only does Pan generate really strong cash flow, we actually added cash to the balance sheet this year, despite spending about 20 million US on non-sustaining capital. About 10 million of that was to expand the leach pad capacity at Pan, because in December of last year, we added about another 2 years to the mine life. And so we needed room to process that extra ore. And the other 10 million went into our Gold Rock project as we push that towards feasibility, primarily on drilling and metallurgical test work. Pan, I'll just say one last thing about Pan. Pan has always been a relatively short mine life mine. It generally has a 5-year mine life. But one of the things we've been very successful at is through a relatively modest expenditure of about $1.5 million to $2 million a year, is just maintaining that mine life. So replacing all of the tons and ounces that we've mined. So you can see the M&I resources and the reserves in 2017, and they've held constant through 2018 and through our last resource update in 2020, and we'll have another resource and reserve update again next year. And that resource and reserve update is going to be based on a much larger drilling program. So rather than spending $1 or $2 million a year, we're actually going to spend about $8 million over the next few months, because we believe that there's a lot of room to continue to grow Pan. So here's the North Pit, here's the South Pit. All these little dots are where we've done the historical drilling to get those resource and reserve replacement numbers. But we've got a lot of targets here. All these red zones here are targets defined by golden soils and arsenic and antimony soils and structural mapping and alteration mapping. None of the ones to the south have ever been tested. The only ones that have been tested are this one here called Mustang. We put 8 holes into it last year. 5 of those holes hit shallow oxide mineralization. So this year we're going to go out, we're going to drill that to resource status, and we're going to get down and start drilling some of these other projects, because with a longer mine life, we can start looking at other initiatives at Pan, like increasing the ore mining rate. We're permitted to go up by about 15%, which would produce gold production up by 15%, on-pad stacking, secondary crushing, and a number of other initiatives that we think could boost gold production at Pan. But the real growth in gold production is going to come from Gold Rock. There's a small open pit left over from the late 1980s at Gold Rock. Pan would sit just back there in the little range of hills. You can see the mineralization here in this pinkish whitish rock at the back wall of the pit. And in context, Gold Rock is down here, Pan is up here, here's Highway 50 up here. It's excellent infrastructure in the area. The red areas here at Pan and the red areas down here at Gold Rock are where we have drilled and defined reserves and resources. And between the two of them, and between what we've already mined at Pan, we're up over 1 million ounces just from these red areas here. All of these yellow areas here are areas that we think are prospective. These are our exploration targets, again, defined by golden soils and arsenic and antimony soils, both at Pan and at Gold Rock. Right now, we just finished up a major drilling program back in April. We paused a bit to get our assays caught up with us. We're kicking off drilling again there this week. And one of the really interesting things to come out of the drilling at Gold Rock was right at the end of the drilling season back here at the north end of the deposit, we started hitting some really interesting high grades, 48 meters at 2.17 grams, 32 meters at 1.4 grams, 38 meters at 1.1 grams. For anybody who knows Nevada open pit heap leach operations, these were really high grades. I mean, the average grade at Gold Rock is about 0.7 or 0.8. The average grade at Pan is about 0.5 grams per ton. So grades like this, you can really start to add some ounces. So again, we're going to be spending about $8 or $10 million, mainly on drilling, on some other feasibility work as well, as we look to expand Gold Rock. We want to make sure that we have the full measure of Gold Rock. How big can this thing actually get before we start going and finalizing putting a pin in the feasibility numbers? Again, feasibility should be out towards the end of next year, but the PEA numbers at $1,700 gold showed a $100 million post-tax NPV relative to a $65 million initial capital, and we're hoping we can improve on those numbers as we go through feasibility. And in terms of building Gold Rock, I think we're well positioned for that. We've already built a lot of the same infrastructure up at Pan. We've built new leach pads. We've done some major stripping campaigns at Pan. And really, that's the major capital expenditure down here at Gold Rock, is building leach pads and doing pre-stripping. We'll have a crushing circuit in there that will be virtually identical to the crushing circuit at Pan. We'll have an ADR plant that will be identical to the ADR plant at Pan. But beyond that, they'll share a lot of assets, existing infrastructure. So the access road into Pan, we've extended it down to Gold Rock. The power line that comes into Pan, we'll just tie into that power line and bring it down to Gold Rock. We'll have the same operating team. We'll have a common mining fleet. So again, lots of potential synergies between that. Feasibility study aiming for late 2022, planned gold production in 2024. In mining terms, that's very near future. We also recently picked up the Illapa Project here up to the northeast. It's about 20 kilometers away. Again, great access. Highway 50 runs right through it. Former producing mine up here. And we really want to focus on exploration. We've looked at acquiring other producing assets. That's been challenging. It's tough to find other assets that actually make money the way Pan does. And so we've got a big property package here. As I said, 222 square kilometers, 55,000 acres. We're going to double down on drilling there at Pan, at Gold Rock, and then later next year at Illapa. So looking for a lot of drilling results coming out over the next kind of 6 to 8 months. I'll just talk briefly about Golden Eagle. Golden Eagle is the project up in Washington State that came as part of this bankruptcy package. 2 million ounces, open pittable in an historic mining district just south of the Canadian border. Kinross is spending $30 to $35 million looking to reopen the Kettle River Mill. Hecla is very active up in the area. Hochschild is very active. It's quite an exciting place to be. Our biggest issue is that we have a very small land package and we would need access to ground adjacent to us that's held by Hecla in order to put in an open pit. That's a slow process, discussions with Hecla. And so in the meantime, I think we'll just hang on to this. It costs us $10,000 a year to hold on to. So it's a cheap option on getting something going up in that area. We're really proud of our balance sheet. 100 million shares outstanding, same number of shares we had outstanding 4 years ago. We haven't raised capital in 4 years. We've worked off the cash generated from Pan, no debt, 23 million US in the bank, $100 million market capitalization, strong analyst coverage, including by Red Cloud. And I think particularly lately, we've outperformed the GDXJ and been one of the stronger performers in the area. Just wrapping up, I think we've focused on operations as a company. We've tried to do what we said we're going to do. We've tried to underpromise and overdeliver, and I think we've been successful on that. And I think there's going to be a lot of exciting news coming out, particularly through continued work in Gold Rock through the feasibility study and lots of drilling at Pan, at Gold Rock, and at our Illapa project. And I'll just leave you with a nice picture of the mine and happy to take any questions.
Great. Thank you very much for the informative presentation, Tim. We'll now move to the Q&A session here. We do have a question or two here. First, obviously you've added, I think in the recent press release, you've added 40,000 meters of drilling to your plans for Gold Rock. What are you seeing there? What are what are you planning to drill? Is that mainly resource expansion or is it testing some new target areas?
Yeah, so at Gold Rock, the main area we're going to focus on drilling is off to the north, where we've been hitting those higher grades, because you can add a lot of ounces with those kind of grades. And then as we go about a mile north of Gold Rock, you get into an area called Jasperoid Creek, where we're seeing oxide mineralization back at surface again. So there's a big sort of mile-long untested zone there to the north that we think is quite exciting. We've got a few infill holes to put into Gold Rock as well to convert inferred to measured and indicated. And then we've got some drilling that's kind of what I call the non-sexy drilling, the geotechnical drilling, the condemnation drilling, all that kind of stuff as well. But most of it is going to be to grow that resource.
Great. And what are the plans, any plans in the near term for Illapa?
Yeah, Illapa is an interesting project. We just picked that up a few months ago. What we need to do up there is really get some boots on the ground, get in there and do some basic mapping and sampling and really try to understand the geology there in more detail before we start drilling. It is going to take some permitting before we can get a significant drill campaign going up there. And that's fine because we can do that permitting over the winter, and that will get us in a nice position to be ready to drill next year on that project. So.
Great. And you had showed obviously the location of the projects, and that one advantage is you can run that all kind of from one central office.
Yeah, exactly. We run all of our exploration efforts out of the Pan mine. And it's a great mine because we're on grid power. Everybody drives to work. There's no camps. There's no it's only an hour outside of town. You really couldn't get a better location, but at the same time, you're remote enough that there aren't any villages or there's no cathedral sitting over the pit that you have to relocate. It's really the best of both worlds.
Great. And then obviously the timing of things for Gold Rock, you had announced that the feasibility coming up later next year, and then still looking at production in 2024. Yep,
that's our plan. We'll finish the feasibility. I think we're going to be in a good position to get project finance for this. There's a lot of interest in providing project finance. It's right next to a cash flowing asset. It's a team with a track record. It's really an expansion project more than a new build to Pan. And so the plan would be to start construction in 2023 and have that done and start stacking ore and producing gold in 2024.
Great. All right. Well, thank you again, Tim, for the excellent presentation today. And thank you everyone out there for joining us today.